In Singapore, the trade receivables market size is about $13 billion. Of that, we estimate that the market opportunity or the addressable market for invoice interchange is about $3 billion. Factoring is an age-old business of companies looking to sell their invoices or their unpaid invoices to a factoring company so that they can get cash up front now instead of waiting for their end customer to pay. And in the factoring business, what happens is that the factoring company takes over the collection on that particular invoice and is often seen as, there's a bit of stigma to factoring because it is sometimes seen as a last resort to get money in. And they are often expensive, inflexible, and it lacks price transparency. Invoice trading is it's a way for businesses to auction off their unpaid invoices to investors to get cash up front rather than waiting 30, 60, 90 days for their customer to pay. Peer-to-peer lending revolves around providing loans or unsecured loans to businesses, while invoice trading basically is where investors purchase these receivables from the seller of these receivables off their balance sheet. So they're actually purchasing an asset. Companies need invoice financing to help them with their cash flow and working capital, and also the fact that it will also fuel their growth or support their growth with that additional working capital as and when they need it. Normally, the type of businesses that come with us are growing businesses who sell goods or services to larger organizations. And the reason why that's the case is because very often these large organizations impose long payment terms on the suppliers, whether it's 30, 60, 90, and we've even heard 120 days. So these sort of long payment terms cause strain to the SME's cash flow and in a way limits their ability to grow. So with invoice interchange, we allow businesses to raise funds in 24 hours by auctioning their unpaid invoices to investors. And we're fast, so SMEs can sell an invoice on our platform with a few clicks of a button and draw down on funds in 24 hours. It's completely flexible. You don't have to sell all your invoices through us. You only sell as and when you need to. It's also completely transparent. Price is set in a real-time auction, and you're always going to know exactly how much you're going to pay before you get the funding. The seller of the invoice will be able to view all the different bids that come in on his or her invoice on the platform. They'll be able to see these bids pop up on the screen in real time as and when an investor places a bid. But the identity of the investor is not revealed, but they can see the bids and the details surrounding the bid. In Singapore, the factoring market over here, or the penetration of factoring as a business, is low compared to the countries in the US and in the UK. So for example, penetration of factoring in the UK is at 10%. Where in Singapore is about 5%. So we see a lot of opportunity there in the sense that where more and more businesses will see what we do now as invoice trading, which is a new way of doing factoring, which is the industry that we are trying to disrupt. An opportunity for these businesses to now see invoice trading as a mainstream way or an option for them to access finance.